Okay, we're starting off. So first things first, folks, just want to wish everybody a very, very happy Christmas and a prosperous New Year. This is the last group web meeting of the year. So the plans are, obviously, there's no web meetings from next week onwards. Having said that, if, for example, something happens in the market and that I feel that a web meeting is warranted, I will organize it and put out the invite. If you can attend, great. If you can't, don't worry about it. We'll record it as per usual. And I'm also available as support via WhatsApp as per usual. So the support and the daily market updates will get out. The only thing that changes over the next 2 weeks is the web meetings as such, okay? Also, I just want to take this time just to show you something there. We're going to change from next year on how we give out the option trade alerts and for both IG index and also for IBKR, because there's people going to be doing it on 2 different platforms, and how we're going to record the trades and how you're going to access and follow the trade. So I'd just like to spend about 2 minutes on that. So first things first, going to our website, folks. The best thing you can always do when you're going to try and access this stuff is log in. So if you're on a desktop, just click on more, go into the menu and click on log in. And when you log in, I'll log in with this account, for example, you're going to get access to more material in the background. So if I sign in here, it's going to bring you into Equity Scan as the home page. So that's where all our stocks are, and you can research the stocks all you want. But where you're going to want to go is up here to the knowledge base. Now, more often than not, when you've logged in already, you're already, when you go to our website, it'll pretty much keep you logged in. But for some reason, if you can't get access to stuff, it's because you haven't logged in. So I just wanted to be clear on that. And then the next thing you're looking for, as I said, is the knowledge base, okay? So when you go to the knowledge base, what I've done here is created a new folder here called Trades and Portfolios. So if you click in here, I've already set the templates here, as you can see, for next year. So the next trades that we do on options, whether it's IG index or IBKR, will be obviously expiring in January. So we're already into the January year. And we're basing both accounts off a 10K account. So they're 2 simulated accounts. And I'm just trying to give people a flavor of what they can and cannot do. But obviously, if you have a larger account, you're going to change your trade sizes and everything like that. So let's say, for argument's sake, we go into the IG index trade log. This will always be just a summary here of how the portfolio is doing. And let's say we have an open position on. So when you click on here, you'll see a little link here on the right-hand side. This will just be a summary of all of our trades that are open. And this will be a summary of all the trades we've closed throughout the year. But you will be able to just click directly into a feed that will show you from start to finish how we manage that trade. So let me show you as an example. We don't have an example trade, obviously, because we haven't done one, but it's going to look something like this. I'm going to go down here to the little support feature. If you click in the news and today's market update, for example, it's going to look something like this, right? And as you scroll down through it, you're going to get the logic behind the trade. And then obviously up here at the front, it's going to be our current analysis. So I'll be inserting videos in here into this feed. So when you click on the link from here, you're going to get into a feed like that on that specific trade. So you can follow it. You can see what have we done, how we've managed it. And it's just a much easier way for you to follow each trade rather than what we've done already, okay? The other thing to note is on the bottom right-hand corner when you log in, so I just want to distinguish, not this guy down here on the main website, but when you're logged into Equity Scan, on the bottom right-hand corner, if you open that, that's a quick link into the news feeds. So we have them labeled. So for example, our daily market updates. So if you clicked on that, it will just show all our daily market updates. When we put in trades, for example, you're going to see another tab here that will say option trades or IG index option trades. You'll be able to click on that, and that's all it will show. So you can get direct access to the news feeds from here. You can also talk to us from here. You can also literally start opening up a conversation with me directly from here through the messages. Or if you wanted to just use the help function here, and let's say you wanted to search for, or show me SPY trades or whatever, this is going to list everything we've ever written on SPY, and you'll be able to directly access to quick links from there as well. So that's all in this little messenger tab down here. It's automatically hidden because we don't want to be annoying people. But if you want to pop it out there, you'll be able to chat to us. You'll be able to access the news feed. Okay. So just wanted to give you that. You can also schedule your one-to-ones from me. So if you click on home here, you can see schedule a mentoring session. So if you're looking to get chatting to me, you can schedule your mentoring session from there as well. Okay. So I hope that just clears that up, and that's going to be coming now. So we potentially could be placing our first trade very, very soon for 2026. So that brings me into the S&P 500. Okay. I spoke about during the week, if you watch the webinars, that this potentially, and as I say, inverted commas, potentially, could be the start of what they call a double top or head and shoulders pattern. So there's one shoulder, there's another shoulder. If we break down below this area here, that's like a bearish sign as such, okay? So we'll just remove them as well. You don't have to have all that lingo if you don't want to. You can clearly just say, look, we got up to this high recently and we couldn't get out of it. That's the pretty simple language. And we've backed off again, right? So that's a double top. And the more times it hits there and fails to break through, the tougher the resistance is, okay? So yesterday we had a down day. Again, it started up higher and then ended up down. Today is set to start up higher, but it potentially could reverse again. We'll just have to wait and see, okay? My view is, based on the low we put in yesterday, it's kind of taking out support here as well. I think we're going to retest. We'll just bring this into SPY. I think we're going to retest down here around 660, 650. There's a good possibility we'll retest that. So what is the culprit here? And we come in here, look at the Mag 6, 7 stocks. Look at the rotation out of here. So yesterday, Apple was down 1%. Google was down 3%. So for those of you, before you ask me, I wouldn't sell my Alphabet shares. I'd certainly hold on to them. We're up 100%. You're going to have a bit of profit taken. I wouldn't be bailing on it myself. Tesla down 4.5. Nvidia, that's the one I've been talking about. Nvidia, that's the one I think out of all of them, the Mag 7 might get repriced. And the reason for that is we know that Alphabet have a chip that could compete with it. We know AMD are coming to the market as well. So maybe Nvidia's elevated multiples may be coming to an end. And so therefore, I do think that I've spoken about that in length over the previous number of weeks. So this has really been the culprit here for the market, because these 7 stocks, guys, account for nearly 33%, I think, of the market, 35% of the S&P 500. So there you go. So if they start selling off, there's a good chance the market comes down with it, okay? So the kind of the conversation we're having at the moment is the rotation out of the AI trade. So now the focus is gone. It's starting to move and shift from, oh, this is game-changing, to, oh, these companies are spending an absolute fortune here. You know, when is the return on investment going to come? Because their margins are going to come down a bit. And that's where the focus is, okay? So this might create an opportunity for the S&P to come back, for us to get in. So right now, I just want to kind of give you my perspective on the S&P 500 for next year and for the immediate future. For the immediate future, it could go anywhere. It could go as low as 6,200 down here to that 200-day moving average, okay? Next year, I think it's going to go up. The only reason I think it won't go up, or if the only exception to that, will be if the US economy goes into a recession. And what could cause that? Bitcoin, I've spoken about, that has a potential impact on the S&P 500. And you got to look at the American economy and see it for what it is. A third of the economy are in big trouble. They're struggling. They're struggling to pay their bills, to put food on the table. But the rest of the economy seems to be doing quite fine. And that's pretty much down to the valuation of stocks and Bitcoin. So if we get some sort of a sell-off in Bitcoin, or a further sell-off, and stocks come down, it actually may start a slowdown economic-wise in the US, okay? So that's one trigger. Another trigger, of course, is something untoward starts happening. Unemployment numbers start picking up, which is a possibility with AI, okay? But right now, just at this moment in time, there's no sign of that. So in the absence of a recession in the US, I think this market goes higher again, and possibly into the mid 7,000s by the end of next year. But in the short term, we're probably due a bit of a pullback, all right. So with that in mind, the trade I'm lining up, and I'm going to go through both IBKR, traditionally speaking, and I'll start with that one, and then I'm going to move on to IG index. So you can see I've changed this now for this account here. First of all, it's a 10,000 account. So the margins are based off a 10,000 account, okay? So this is speculative. Don't forget what a short put is. You're basically saying I'm happy to take assignment of 100 shares of the S&P or SPY here if it falls below a certain level. So I will be looking down here at the 640 strike, just to give myself a bit of leeway here. The delta is quite low in it, so we're still not getting the premium I want. So it's still too early to place the trade. But if I was, this is the strike I'm kind of looking at, okay? I'm not happy with the premium at the moment, so I wouldn't place this trade. But look at our probability here is 92%. And the reason for that is the S&P could fall in the next month, about 6.5% before we'd start to lose money on it because our break-even price is here, okay? So that's the strike price I'm looking at, but it's too early to put on because the premiums aren't good enough. If you look at the IV rank here, it's only 11. Sorry, did somebody want to ask a question there? No, okay. So this is the one I'm lining up for IBKR. Now I want to show you just on a 10K account and talk a little bit about margin. Okay. So if I click on order here, okay, and I sell one contract, and I'm going to just change that to market, okay, and I'm going to go preview order, okay. It's saying we're unable to accept our order here because the margin is too great. Do you see that? So for people who have less than 10 grand in IBKR, you're going to have to turn this into a bull put spread. And that's the reason why I brought this back down to 10K and why I'm going to share with you why IG index might be a better route to go. So now we're going to have to buy a put option underneath this strike. So let's say we bought, just to allow us to place the trade, we might end up buying the 600 strike here. It limits our risk here, so therefore we'll be able to place the trade. The downside is we're not taking in as much money. Our credit goes down as such, okay? But if you're under 10K in an account, you're going to have to turn it into a bull put spread. And the width of the strikes will be dependent on how much risk you're prepared to take. Now, I will be spelling that out when the time comes, what we're going to do. I'll be keeping the strikes wide. I just want this as a token gesture to allow us to be able to place the trade, okay? So just think of it on a monthly basis, €200. It doesn't sound like a lot. It's 2%, guys, in a month with a 91% chance of getting that 2%. And that's only doing one contract. You could probably do 2 contracts on this because your risk is absolutely known here, okay? So just something to bear in mind, okay?
Stephen?
Yeah?
What size contract would you want that would accept, say, a short put of 1?
What size of account?
Account, I mean, yeah.
Yeah, you probably want to have about 20K in it, and then you'll be okay. Your margin would probably be only 6K on a 20K account, you know?
Okay.
Yeah. So switching over to IG Index, this is a much simpler platform, folks, to use. And I'm going to just give you the rules. And I just want to share a bit of news with you as well. We're in the early stages of building an algorithm that you could plug into your IG Index account that will manage this strategy for you. So it will sell the put option, it will roll it out and down if it gets under a bit of pressure, and it will stop you out when certain parameters are hit. So at the moment, we just have tech guys working on it to see can it be built. And if it is, you will be able to plug it into your IG Index account and all the trading will be automated for you. So that's potentially coming down the line. So if you could send me a little message when you're listening to this whether it's something you'd be interested in, and what would you want it to look like in terms of on your side, or is it simply a case you'd want us to manage it for you, put the parameters in for you? And I'll explain that again in greater detail, but if it's something you can have a think about, see, is it something be interest, it would mean that you wouldn't have to be worried about rolling out and down and managing trades. It'd be done for you, okay? Anyway, so what we would go here is the January the 26th expiry. We go down to 6,400. So we're mirroring IBKR. So you can see here, we're getting 26 points. Let's call it 26 points in, okay? And our bet size here, so the rules I want you to adhere to if you're going to do this in a spread betting account is no more than 50% in this trade, okay, of margin. So 50% of this 11,600 is 5,800, let's say, okay? So if we put in an account, a trade size of 20, that gives us 5,700. So that's fine, okay? So what this is saying here, folks, is we potentially could make $520 on January the 16th if the S&P 500 remains above 6,400. We know it has a 91% chance of being profitable. It doesn't mean it's a guarantee. It never does, okay? If that happens, you'll make a profit tax-free for people from the UK and Ireland of $520, okay? That's a return on investment, guys, of just over 5% in a month, tax-free, okay? And it's kind of as simple as that. With this strategy, we would just click on place deal. Now, the risk management I want to talk about next, okay? So I'm just going to focus in on this because the same logic will apply in IBKR, okay? I want you to imagine we've placed this trade. In fact, I'm going to go and place it. Okay, it's done. So the deal is on. But now I want you to imagine, oh, we've changed our mind. We're getting anxious. So what would the evasive action be? We would roll out to the February expiry and the strike price down to bring our break even down even further. So what we would need to do is, if you think about it here, to buy ourselves out of this contract now, we would have to spend $27.70, okay? So we need to go to February and see, well, where will we get $27.70 in order to cover the cost of closing us out of the January contract, okay? And as you can see here, we're able to roll down at this moment in time to about, let's call it 6,000, okay? So you can see there, we've already got our risk management plan in place now for this IG index account. If at any stage we feel we're not happy with this trade, we roll out to February and then down to the 6,000 strike, okay? And then if that comes under pressure, we go out to March and we roll out to March and down to a lower strike, if that makes sense, okay? So this is how we will manage this trade on an ongoing basis. Now, what is the trigger, okay? For me, the rule of thumb, and what will be in the algorithm, guys, is if it's within 1% of the strike price. So if the share price of the US 500 in this example gets within 1%, let's go back to January. So let's say it gets within 1% of 6,400. So that would be about, I don't know, let's call it 6,500. So if the share price of US 500 gets to 6,500, we will automatically roll out and down to February. We won't wait. We'll just put the trade on. So that's the risk management plan in place. And these will all be outlined. As I trade these, guys, I will do a video saying exactly what I'm going to do. I will also document it. And then if we ever do go and have to take action, I will record that as well. And I will update the news feed that we spoke about earlier on. Okay. So that's kind of the US 500. What am I waiting on? Why am I doing it today? I'm just going to close this down, guys, because I don't want to. I'm waiting because I just want to see, does this low get a retest? And if it gets broken today, then I think we're obviously going lower again, you know. And I would like to see this RSI down closer to 32, and then I'd be happy to pull the trigger on the trade as such. So I'm just waiting and keeping an eye on Bitcoin as well too. Look at this downtrend that's resumed, guys. I suppose people who are invested into Bitcoin will be satisfied that the recent lows haven't taken out here. So there's a bit of a silver lining there at the moment, but we're just going to have to wait and see on that one. So I'm just waiting, I suppose, for the opportune moment to try and generate as much income out of this, because if it does fall further, I'll change the strike on this. I will go from 6,400 to 6,300 just to give myself the best possible opportunity of winning. Okay? Does that make sense, folks? Have you any questions and all of that? Okay, I'll move on. So the next thing I want to talk about is oil. And you can see oil is kind of stabilized here. So it's after hitting this support area on a couple of occasions. So we're now down at significant lows that we haven't seen really since kind of COVID, to be honest. And the reason for that, it's important to note, is I suppose now, you know, we've had a Chinese economy that's been struggling, so the demand from oil from that perspective has been lower. You've got maybe the drill baby drill mantra has caused a little bit of excess supply, and of course now we've got this talk of a ceasefire between the Ukraine and Russia, so all of that is playing into lower oil prices. Okay, so at some point in time, this will be what I call one of my speculative trades. So how do you trade it? And there's a load of ways. If you want to be more conservative, just buy USO. That's an ETF, trades like a stock. You just buy that and you sit in it, and then you sell it when it goes back up again. Okay, and there's nothing too stressful about that. Okay, the other way to do it is buy call options. So you could buy call options on USO if you wanted, and you could buy call options on the futures contract itself. Okay, and if I just go back into Interactive Brokers, let me show you the futures contract. The main one is quite a big charge. So you could look at the micro version, which is MCL. Okay, and this isn't as big of a contract. So what you would do here is, with call options, guys, when we're buying them, we like to go out 60 to 90 days. The reason for that is we want to give ourselves as much of a chance as possible for the trade to win. Okay, so time is working against us, don't forget that. So the further you go out, the less theta value you'll find the option has too. Okay, so now we're going to kind of come down, and we're going to look for deltas now that are at about 0.7. And the reason we do that is deltas can be seen as a proxy for the probability of the option being in the money. So you can see here with a delta of 69, that's a 69% chance that this crude oil future will be above 52 at expiry. It doesn't mean you'll be profitable. That's not what this means. It means that there'll be some value in it. Okay. In other words, your break even is going to be lower. The downside is it costs more. So if we clicked on the ask price here, for example, on the micro future, it expires on March the 17th, but it's tracking the April futures contract. We would click on buy here. Now you can see here, it's your typical multiplier of 100. The main crude oil contract is 1,000. So this is cheaper. So our max loss here is $584. But look at our break-even price. It's $57.90. In other words, if you think crude oil at any stage between now and March is going to be above $58, you're going to make money on this trade. Okay. So on the flip side, if it doesn't, if it drops and it obviously goes below 52 at expiry, you lose your entire investment. So that's why buying call options, it's risky. You're not tying up as much capital, but you have the risk of losing all your capital, and you've always got to be aware of that. Okay. Switching over to the IG index platform, you can trade it on the options here, and again, it's tax-free. So this time we would go and look at our commodities. We would click on US crude oil, and let's say we go out to, they're only giving us the March one now, which is basically expiring in February. So that's the March futures contract which the option though expires on the 17th of Feb, okay? So again, let's say we go in the money to 5,200. This is based on the point system as well. So let's say you bet $1 a point that the S&P 500 is going to stay above 5,200. So let's say at expiry on 17th of Feb, it's at $58. Okay, so 5,800. That means that this call option is going to be worth 600. You paid 533, so you would make a profit there of about $67. Obviously, if it goes to 6,000, let's say, you're going to make more for every 1 point you bet. So it depends on your bet size. If, for example, it drops below 5,200, you're going to lose 1 times 532. If we put 5 in here, you're going to lose 5 times 535. So your bet size dictates how much you're going to win or how much you're going to lose, okay? But your break-even price on this is 535 on top of the strike, which is 57.35, okay? So again, you're thinking crude oil is going to get above $57 or $58 a barrel when you get to February. So I hope that makes sense to you. This is tax-free, again, for residents of the UK and Ireland. Any of your profits are tax-free because it's structured as a bet. Any questions on that, folks? Or comments? Anything confusing? No? Okay. So I'm going to kind of move away from the options then, guys. That's kind of it for me. They're the two trades I'm eyeing up. SPY is jumping in pre-market here. It's up 0.6 or whatever at the moment. Let's see how that pans out throughout the day. This is the go-to strategy, guys. I keep saying this with your portfolio, okay? We've spoken about oil. That's a risky trade. Your probabilities are going to be about 40% on that. So, but your upside potential is significant if you're right. So timing is everything with those ones. But just moving on a little bit there, just in terms of some of the stocks that we currently own. Just in the short term stock trades, Alaska, still waiting on that to get to 55, and we're going to hold on to Flutter. Okay. On the long term portfolio, anyone who's holding Wetherspoons here, we're getting ready to sell that. If that gets to or closes up at about 6, I think it's 750, we have our target price on that now. And you can see I have an alert here on it. We're getting ready to sell that. Okay, so Wetherspoons, we're getting ready to sell. So I just wanted to mention that to you as well. And then back into just showing you around this new format for reporting stuff. So we went to trades and portfolios. Again, look at our long-term buy and hold portfolio. This will link you directly into Equity Scan for each one. So we're going to record our trades, what we do in Equity Scan. So let's take Google, for example. We click on Google. It's bringing us into Alphabet here. You can see straight away what the analyst target price is, what our target price is, what the RSI is, and then our little notes here. And you can see the last one I put on was December the 11th. We continue to hold Google for the long term. So I'll be updating my thought process on the stocks that we own in Equity Scan, okay? How do you get to Equity Scan? Again, just to remind you one last time, you go to log in and it'll bring you straight into Equity Scan, okay? So I can't make it any simpler than that, guys. That's kind of how that's all going to operate. I just thought I'd have a quick look at the metals as well, because I know a lot of you are invested into metals. And fair play to you. You've done, most of you have done quite well. So gold, you can see, is retested the highs. So we spoke about this. I felt it was going to retest the highs. It's retesting the highs now. So this is going to be very interesting to see what happens with gold. So what could you do? Let's say, for argument's sake, you've made a lot of money in gold and you're looking to protect your position. You could look at buying some put options, just use up some of the capital you made to buy some put options just to protect yourself. Maybe you don't want to realize the profit in this tax year, so you want to leave it run to January. That's fine. So what you could do is close out in January and wait to see does this ceiling get broken, because if it doesn't and it backs back off again, you could be buying back in a lot cheaper. Okay. So just a little kind of way to manage your gold exposure if you have gold. Okay. That's what I wanted to cover today, guys. Any questions for me? Is there anything you want me to look at? We're all good?
All good.
All good. Okay, guys, I'm going to leave it there. Very, very happy Christmas to everybody, and a very prosperous new year.
And you too, Stephen.
Okay, guys.
Same to you, Stephen. Have a
All
good
right,
one.
guys.
Bye.
Chat soon. Bye now. Bye-bye. Bye.
Bye-bye.